Hi traders, it's Roberto. This is another tutorial. I'm going to go over counter trend trades and trading with the trend. And there are a couple of rules that we need to follow and we need to stick to, adhere to, in order to make this work. So it doesn't become confusing because markets do not go in a straight line up or down. And we want to take advantage of when the market and recognize when the market is retracing and when that retracement is over and it's ready to resume its trend. And let me just give you a few examples of that. On this pair, pound Australian dollar, in the past we were looking at central pivot points for entries above or below and using a moving average line to help us for a directional bias. And now we're adding Ichimoku cloud to that mix. And I'm just going to show you a couple of tricks, a couple of things that you can do to help you just using two time frames, a 1 hour chart, a 4 hour chart. On 1 hour chart you take advantage of counter trend trades and you need for the 4 hour chart to confirm that, and then you use the higher time frame for directional bias. So let me just go to the 1 hour chart and just show you a trade setup. So coming into a new day, we know on the 1 hour chart price is below the cloud and price was started going below the central pivot point and below the 21 moving average line. This would have been a nice sell trade on the 1 hour chart, but I need to confirm this on the 4 hour chart. If we look on the 4 hour chart, however, this trade is really a counter trend trade because price is above the cloud. And notice that price continued to go up. Even with this huge retracement, it found support, turned around and broke the swing high. But on the 1 hour chart, the market was in a downtrend, and this trade that we took was below the central pivot point. At the time of entry, price was below the central pivot point on the 1 hour and 4 hour chart and finally broke the moving average line, so that would have been a trade to take for this particular day. Okay, there it is right here. We would be selling this trade, this pair. And then we know that on the larger time frames we're in an uptrend, so we cannot stay in this trade because look what happened. It just recovered. It gave back all the losses. Notice this. So we have to really distinguish between what is a retracement and what is a trade in the direction of the trend. So this trade we would have taken, exit at the bottom, and then waited till the next day. Here's the next day here, and then we see that price is breaking above the central pivot point, coming into a new session above the 10 moving average line, but we don't really have a trade yet until it breaks the cloud, this Ichimoku cloud. This is a more conservative approach because if we look at the 4 hour chart, time of entry, and here it is. Here's price above the central pivot point, above the 10 moving average line. It's also above the cloud. So we're resuming the upward trend. So we would have taken this trade on the 1 hour chart. The trigger was on the 1 hour chart, but the directional bias was on the 4 hour. So now we're in an uptrend. The market has been moving up nicely all day. It put in over 160 pips, I believe, over 192. We're in an uptrend. We're coming into a new trading day. So naturally the market's overbought and we're looking for some sort of retracement. So what do? We need for the market to come back down. It may not come down. It may just break the swing high of the day and continue to go north. That's another possibility. And in that case we would take the trade and stay in throughout the whole day. Or we can, the other option is draw a fib from the swing low of the day to the swing high of the day. And these are the retracement levels. Right here we have 61, 50, 38, 23% retracement level. the market's projected range is about 200 pips. A little bit overbought, so what do? We'll find signs that the market is pretty much topped out for the day and it's due for retracement looking at this one rejection candle here. Now if a body of the candle closes above here coming into Thursday, then of course this doesn't really matter because price has broken above this false break. But if market starts turning around and heading south, then we'll start looking for an area to buy down at these levels. Remember, right now, if we look at the 4-hour chart, price is above the cloud, price is above the central pivot point, price is above the 10 moving average line, and the moving average line is slanted up. So we're in an uptrend. But again, like always, what happens? We're hitting a previous resistance level. So what do? We can't really take a trade at these levels. Either we wait for the market to retrace, find support and turn around and maybe retest that area, or wait for the market to break that level of resistance and then resume its trend. So coming into Thursday, it's going to be difficult to take a trade unless there's a retracement. I wouldn't feel comfortable taking a trade at a previous resistance level, even if the market's in an uptrend. Okay, let's look at some more pairs. Here is another pair. This is Aussie CAD. Same thing. Finally broke below the cloud, and it's below the central pivot point on the 4-hour chart and below the 10 moving average line. Technically we're in a downtrend, but what happened? We have a previous support level. So we don't know if this support level is going to be held, and if it doesn't, then we have a nice trade. If we have a body of a candle that can break below this previous support, then we have a great trade setup. Now on this trade, could we have taken a trade going south? Yes, most definitely, because price was below the central pivot point and the 10 moving average line, even though it was inside the cloud on the 4-hour chart. If we look at the 1-hour chart, price broke below, let me just remove this line, price broke below the central pivot point, below the 10 moving average line. We could have taken a trade even if price was above the cloud, because price was below the central pivot point and the 10 moving average line, and it had to take a direction, and it took a direction opposite of the previous day and put in its daily range. The market went up 119 pips going up, and then it went down 121. So it's pretty much done its daily range, going in the opposite direction. Coming into a new day, I would actually be looking to buy at a previous support level because the market's already done its daily range. So this would be a buying opportunity at the moment, and the risk is minimal because if it does break the support, then we're only talking about 20 pips. But because the market's already done its daily range and it's bouncing off a previous support level, I would rather buy than to sell, even though the market flow is down on the 1-hour and 4-hour chart, because the market has done its daily range. Now what am I looking for? A short amount of pips. I'm not looking to stay in this trade very long. It is below the central pivot point. We're in a downtrend, but because it's hitting a previous support level, if we did not have a support level here, then I would not be looking to buy at these levels. But we need to take into account that this is level of support 1, 2, 3 days of the market finding support, and then giving us a nice little pin bar, nice little wick here, and the market is starting to go up. So this is be a great buying opportunity. I'm actually going to take a position as I'm talking, and I'm not looking for a lot of pips because I know I'm in a downtrend. Okay, just like here, look at this trade, went all the way up. We're looking at the market going up, but what happened? It turned around and went the other way. It was hitting a previous support, turn resistance from all the way back here. And even though it was above the cloud, and even though it was above the central pivot point at the time of entry, and above the 10 moving average line, look what happened. We had a color change candle and the market just turned around and went the other way. We find ourselves in the same situation when the market is hitting a support level. We buy at these levels, our stop loss is minimal. Price is in a downtrend, but it is hitting a previous support level, and we just have to wait and see if either it breaks these levels of support, and then which eventually we will do, we will sell it because it is below the central pivot point, below the 10 moving average line, but we should get a bounce off of these levels. And that concludes this tutorial. Thanks for watching. Next lesson will be on divergence, price action, more on candlestick patterns I will be going over. And see everyone in the trade room and have a good week trading.